Good morning. A lot of companies are reporting results for the latest quarter, third quarter. Were they within your expectations?
I think for the 2015 quarter three numbers for KLCI companies, they are actually lower compared to quarter three last year. Banking sector, plantation, transport are some of the more notable declines in earnings for both year-on-year and quarter-on-quarter basis. Going by the subsequent downward revisions to the expected full-year earnings growth by consensus, and we also noticed that actually we have seen more downgrades to target prices than upwards.
So is this like a bad omen for the market going forward?
I think it has been not doing so well, so it has been reflected in the earnings revisions throughout the year. So it is not so good for this year, but actually if we look forward to 2016, the earnings figures are more positive.
And what kind of clues does the third quarter give you into the kind of opportunities in various sectors?
For the various sectors, I think it's definitely we still play on the trend of the weak ringgit, and it's likely to stay weak in the near term. So exporters would likely do well as their pricing can be more competitive compared to competitors in other countries. Those in construction and IT-related companies who are going to benefit from government expenditures should also do well as they have better earnings visibility. And lastly, I think for the hospitality sector, we actually expected them to benefit from the weakened ringgit, but the recent haze and some of the protests have affected tourist arrivals negatively. So with both the haze and protests over, I think tourism-related companies should do well also.
We see a lot of companies' results are being affected by the ringgit, and certainly that's a big theme this year. Astro had the same experience, Tenaga as well. Do you think that the ringgit will go lower? What with OPEC continuing with the supply going on right now?
I think OPEC just concluded the meeting, and it seems like it didn't turn out so well. So we see sustained fall in the energy prices. But from this level, I don't think ringgit is going to fall more because most of the weak oil prices have been factored into the ringgit already. And some of the more positive developments we have for the currency are positive trade balance so far, stable FX reserve. So that's a good thing. But it's going to likely stay range bound because we also do not see positive catalyst for a rebound. In fact, in the near term, fund flows from emerging markets could still be very volatile. So especially when investors are anticipating the rate hike by the Fed coming next week.
The other phenomenon is also the fact that small cap stocks have fantastically outperformed big cap stocks. Do you expect this trend to continue?
For the rest of the year, if we look at the fundamentals, from fundamentals point of view, it does suggest that the small caps are cheap relative to the large, for a PE of 12.5 times versus the large cap 16 plus times, and the PB is less than 1. And if you believe in window dressing towards the end of the year, the effect should be more pronounced in the small caps as it is easier for small caps prices to move rather than the large. So small caps do have a good chance of outperforming the large caps for the rest of the year, but market timing due to seasonality is not really something that investors should do.
Small caps are usually viewed as something that's a lot more risky than big caps. And moving beyond the end of the year into 2016, do you think that you should go even more granular in small caps and look at certain sectors within the small caps category?
I think for 2006, our advice to investors is not really just small cap and large cap. I think the key thing is really for the past 7 years, we've had a good run in equities, be it Malaysia or the rest of the world. And we have advised investors to be overweight in equities. So coming 2006, I think it is challenging because global economic growth is going to be better just because emerging markets did so badly in 2015. So investors should really weigh the risk and maybe not go so much overweight in equities relative to bonds. And from this aspect, then perhaps the risk that they want to take in terms of small caps, they should also manage it within their portfolio.
Thank you. That was Wong Wei Yi, General Manager at Fund Supermart Malaysia.